Investing in real estate for a 401k at a high level works like this. The traditional 401k is administered by, if you are working full-time, your company's benefits provider is going to administer that 401k. So they're going to be collecting it from your paycheck, and there is an administrator of that, and then they would send that off to a company such as a Fidelity or some form of financial company where there is a financial advisor. Basically, they're a custodian. There's a financial advisor that is going to be administering your 401k plan. Now, you can go in as an employee and you have limited direction. They give you certain allocations, asset allocations that you can invest in, but it's very limited. And ultimately, the control of your growth of your 401k, of your income or your retirement income is based on the performance of that stock, of that investment. And the honorability of that business and that sector and how that sector is performing. And of course, how good your financial advisor is. When you do a real estate, if you want to reallocate some of a portion or all of your 401k into a real estate asset, be it a real estate asset that you're managing on your own or you're investing in it and having it professionally managed, you are doing what's called a self-directed IRA. So you would be working with a company such as Equity Trust. I am not affiliated with Equity Trust, nor am I affiliated with Fidelity or any of the names of companies that I'm suggesting here or that I'm stating here. All I'm doing is stating them as a mere example to illustrate the type of firms that do this. But Equity Trust is a company that would be a custodian. Basically, you would pull your money out, you would hand it off to a company such as a Equity Trust. They would then allow you to manage or invest your money into a qualifying real estate. It has to qualify into a qualifying real estate asset. Any of the proceeds, the cash flow proceeds of that, it's because now it is your 401k that owns that asset. It's actually not you personally. Your 401k owns that real estate asset. So any of the gains of that, your monthly cash flow, any of the tax benefits, all of that is actually being owned and represented by your 401k. So it's definitely a great way to go. If I were to give any advice, of which I'm not really advising any direction because I need to know your specific direction, I would say a combination of keeping a certain amount of funds in your traditional 401k and then having a certain amount that you can control and invest in a direction that you have ultimate control. And of course, there are other benefits to real estate that 401k would benefit from. So with that, I hope that was of value to you.